Good Monday. This is Jay Brew, co-chairman of Seifried Brew. Dr. Ed and I put together last week our first ALCO presentation. And within that ALCO presentation that's available to the subscribers to our performance risk report was Dr. Ed talking about looking at the Fed's portfolio of securities, which you've seen him talk about before, but indicating that the two legs of when the Fed might start essentially a tightening by selling off the portfolio happening based upon the Fed's own estimates sometime late in 2012. But the two legs that could either make it sooner that they would tighten versus later is the whole situation with unemployment. And of course on Friday we saw unemployment moving up to 9.1%. We saw it once again, more weeks of jobless claims up above 400,000. We also saw non-farm employment rising not as much as expected. So when we look at that with unemployment at 9.1%, it leads one to sit there and say this rate scenario is going to remain at this level for some time. But another point that Dr. Ed had made is that, gee whiz, Jay, just think of this, that interest rates on the short end were near zero during the financial collapse, and here, years afterwards, we're still at the same place. Isn't that telling us something? So when we look at it as the 10-year bond has moved down below a 3% in here, when we've talked like we did last week from the standpoint of where short-term rates are, is that once again one must come up with an overall strategy to sit there and say what should we be doing over the next year, what type of deposits in terms of not only their pricing but their maturity, as well as how do we price our assets going forward. And that was one of the chief things that we discussed as part of that ALCO presentation. On to another subject. We've been talking before about municipal bond ratings. And it's interesting, there was an article in Bank Technology News talking about a ABA risk management forum in which Karis Korn, the OCC's director of risk management, spoke. And she talked about how the OCC is going to be looking at municipal bonds as part of their regular supervisory exams. And she made the comment that the OCC is at the beginning stages of determining how much risk banks are taking with their municipal bonds. But she outlined in her comments basic things which every bank should be aware of with their municipal portfolio. They really want you to know what exactly you're holding. They also look at it from, there's a world of hurt out there. Once again, they're looking at that whole question that we've talked about before around the whole myth of huge defaults going on. And so the OCC has their ears up. We've also heard that the Federal Reserve in their examinations have their ears up about municipals. Less from the FDIC, but one of the points that she made was that under Dodd-Frank is the financial institutions cannot rely on the ratings from credit rating agencies. So when we look at those Moody's and S&P ratings, what they want you to have is further backup. And of course, one of the things that we provide here at Seifried Brew are independent ratings on municipal bonds. And it's interesting because it goes to some of the things that she was talking about in terms of having an understanding of financial performance. When we look at tax-exempt financial performance and taxable municipal bonds is that we look at that financial performance. And what we really want to see is conservative financial performance to get our highest rating. If not, then there's two levels of warning. down to the S&B 1 being the highest rating, S&B 2 seeing some financial vagaries, and then S&B 3 where there's some definite problems and should be a warning sign to a bank, and then finally S&B 4 where we would question whether or not the municipality would be able to pay the principal and interest on the bonds that they've issued. But interestingly enough, within that is that, and we've looked at literally thousands of municipals, one of the things that we keep saying is that we're just not seeing the S&B 4s in community bank portfolios, which is a sign that there is financial strength in the municipal market, especially those held by community banks. The other thing is that they're looking at geographic concentration. And that's another thing that we do here, is not only from the standpoint the regulators tend to look at this state by state, but we actually have created a whole program where we break the entire nation down into economic zones. And that's been supportable in terms of looking at different geographic concentrations. And they also want you to know in terms of where the repayment is going to come from. So they want a clear idea if it's a general obligation situation, if it's a revenue situation, because they feel that bankers are not in the know in terms of exactly how these bonds work. So when we look at this overall, is that it supports very much the whole aspect of what we do here at Seifried Brew in terms of rating municipal bonds, because it'll give you due diligence from the standpoint of bringing forth to the regulators that you've had an independent view of the portfolio that's not dependent on the rating agencies. And it also shows that the board of directors, who are eventually fully responsible for the investment portfolio, have performed their due diligence. We've done many meetings where we've come out to the banks and have not only rated their municipal securities, but have also talked with the board in terms of our thoughts, not only of their portfolio, but the overall municipal market. And that has put some board members at ease, because the faith that came about because of Meredith Whitney talking in December on 60 Minutes, remember, talking about this year in terms of hundreds of billions of dollars of defaults. And actually the OCC examiner mentioned that, gee whiz, we're just not seeing the defaults, but like I said, she said we're seeing a world of hurt out there. So the question is that can you support the due diligence of looking at your municipal portfolio? Getting the financials, which is a big part of what we do with the ratings, is not only provide you with a rating on your municipal securities, but we also provide you with all the financials as backup. And within that due diligence is that my feeling is it can make your exam go a lot easier in this particular area. This is Jay Brew, co-chairman of Seifried Brew. Have a good week.